Last month, I made over $7,500 trading with prop firms. And in this video, I want to break down the real trades that led to those payouts. But I also want to talk about the hidden rules these prop firms have. Rules that almost became a serious problem for me and that will somewhat limit the way I can trade with these firms going forward. That's why in this video I want to share my complete experience from the past month, the good sides, but also the things that hardly anyone talks about. Now here's the important part. If you're already profitable, prop firms can definitely be a powerful way to build capital for your personal trading account in the short term. That's why I now want to go through two trades in detail, so you might also be able to take something valuable away from the strategy itself. Right now, we're looking at the overview of the completed accounts. Naturally, the balance displayed here is always slightly higher than what was shown on the payout certificates before, because you still have to calculate the 80% profit split. And if we click into the details here, we can see the overview of the trades. There aren't that many trades overall, since these accounts are settled every 2 weeks. Let's take a closer look at this trade from March 24th. Towards the end of March, right around the beginning of this account, this was a short position on the Australian dollar. And I want to highlight this trade because it showcases several key aspects of our trading strategy really well. But before we get into the trade itself, let me quickly give you some context. A few years ago, I had already tested prop firms before, and I was probably unlucky enough to choose the wrong companies back then. By the time I finally reached the payout stage, one of the firms had suddenly disappeared and the other simply stopped paying out traders altogether. Because of that, I shifted my focus back to trading my personal account. But as this prop firms industry gets growing and kept growing more and more, I eventually decided to give it another shot, mainly to find good prop firms, but also to uncover the hidden rules that often aren't clearly communicated anywhere. Unfortunately, this dashboard only shows the 1 minute chart, so let's switch directly over to TradingView. We're now inside TradingView at the exact area where the entry happened. If we compare it briefly, you can see the 1 minute chart where the trade was executed, and here we have the exact same setup. But now we can zoom out and look at the bigger picture where the actual analysis took place. You can see these two yellow zones here. You can call them inefficiencies, value gaps, or whatever terminology you prefer. The important thing is that these are key areas in price action that have a very high probability to attracting price or causing a reaction once price reaches them. But before we dive deeper into the chart itself, I want to briefly talk about our fundamental analysis tools because they were actually the key factor behind this trade. Inside the community, we have already taken a swing trade from this daily fair value gap, and the analysis of the underlying fundamental data was what gave us the confidence to look for an additional entry setup, which is exactly what I traded on this account. Now, if we take a look closer to the positioning data, we can see the large speculators, the commercial traders, and the small speculators, who are usually positioned on the wrong side of the market overall. What stands out here is that the commercial traders, who are typically considered the smart money in the market, were heavily short positioned. That suggested there was a strong possibility of a downside retracement. And here's another important detail. The large speculators had already started reducing their positions slightly. In other words, they formed a lower high in positioning while price itself formed a higher high. That creates a divergence, and that's another confluence factor we can use in our analysis. So the probability of price retracing lower, at least below these lows, was definitely there. That means step 1 of our analysis, the positioning of the large speculators and commercial traders, already gave us a strong indication that price could move lower. The forecast tool and the valuation index in this case were neutral, meaning they were not conflicting with the trade setup. Now, if we focus on the chart itself, let's start here on the daily time frame. We can clearly see that the price first took liquidity above these highs. And when we zoom out to the bigger picture, the monthly chart, we can see that this old high was reached almost perfectly. In other words, liquidity was taken from the market. In this case, the buy stops above these highs were swept, which we can also clearly see on the daily and weekly charts. That's why, based on both the chart structure and the fundamental data, we were expecting a reaction. And as we already saw earlier on the 1 hour chart, this inefficiency, this daily fair value gap, was respected almost perfectly. Now we can drop down to our execution time frame and see that after this reaction, a new 1 hour fair value gap or inefficiency was created as well. Also pay attention to how precisely price respected the 50% level on the close. Because of that, there was a very high probability the price would continue moving toward the next fair value gap, the next inefficiency, at least into this area here. The trade could probably have been held even further, potentially below these lows, but in this case the idea was simply to close the trade once price reached this inefficiency. And as we can see, the market reacted there almost perfectly after filling that imbalance. I believe price even moved below the lows afterwards, which it did. But the core idea behind this trade was simple, moving from one inefficiency to the next, while the higher time frame context clearly pointed toward a bearish move overall. Now, the problem with these prop firms is that they are not really designed for consistently profitable traders, over the long term at least. The entire business model depends heavily on challenge fees, which means profitable traders eventually become an expense for the firm. Naturally, that creates an incentive for those companies to limit payouts as much as possible. That was actually the main reason why I ignored the whole prop firm space for years. But a few weeks ago I decided to give it another chance. The rules seem to be getting stricter and stricter, making it increasingly difficult for traders to actually receive payouts. And there are even statistics out there claiming that only around 1% of traders who start a challenge even make it to a payout. And later in this video, we'll also talk about that and why that is. Now, I also want to go over a second trade that followed a very similar principle. If we look at this account here, we can see two profitable trades, although both were part of the same overall trade idea. There's also a small loss here, which was another add-on position in the Australian dollar, but it was managed very tightly and essentially it was the same short idea I mentioned earlier. And here we have a trade on silver, followed by take profit 2 being hit the next day. One thing I can already say after this month is that financially this entire prop firm experiment has already paid off for me. All the risk, all the challenge fees I paid have already been recovered through profits, so overall I'm already net positive. Everything that comes from here on out is basically a bonus. And that's exactly why so many traders are attracted to prop firms. The relatively small challenge fee is obviously very tempting, but at the same time none of this really matters if you don't have a profitable strategy, because without one, failing 2 or 3 challenges in a row can quickly turn those fees into a significant expense. Again, this dashboard only shows the 1 minute chart, so let's switch back over to TradingView. You can see here that this is the exact same price area. The entry on March 24th and then the take profit being reached overnight on the 25th. So let's once again start from the daily chart, and very quickly you'll notice the similarities between these two trades. Just like in the previous setup, liquidity was taken from the market first, in this case below this old February low, and we can clearly see the reaction after those sell stops were swept. On the 4-hour chart, we once again see a reaction from a higher time frame reference point, in this case the 4-hour fair value gap. At the same time, we also had opposing liquidity resting above price in the form of buy stops, which served as our target on the 1-hour chart. Then once again, we had our entry at the fair value gap itself. Price pulled back into the zone, and if you look closely, you can see how precisely this fair value gap was respected. What we would call a double reaction candle. And from there, price continued moving towards the 1-hour fair value gap, which was our target. So those were two examples of trades that ultimately led to these payouts. But now comes another very interesting point. The more profitable you become, the tighter things get with prop firms. That's why, in my opinion, it doesn't make sense to rely entirely on those firms. I already had some very negative experiences with prop firms a few years ago, and even this time I've already received 2 rather interesting emails. One of them stated that I had used more than 70% margin exposure at one point, and honestly I simply hadn't read all of these hidden rules closely enough. As a result, I'm now limited to risking a maximum of 1% per trade going forward. Now, that's not the end of the world, but I think traders should be aware that almost all these firms have hidden rules buried somewhere inside the FAQs, blog posts, or vague policy articles. And in the end, they can essentially restrict you whenever they want, especially if they believe your approach could remain consistently profitable over time. Because obviously, it's not exactly beneficial for those prop firms if they have to keep paying you over and over again. And yes, I've already received a similar message from FTMO as well, saying that my future trade limit is now capped at 1% because apparently they consider my approach to be a high risk, high reward, or a form of one-side betting, which honestly seems pretty ridiculous to me. As you have already seen from the trades in this video, I was making relatively consistent gains of around 1% or 2% without taking excessive risk. But they refer to an article and to the general terms and conditions, both of which are written in extremely vague terms. So in practice, FTMO can more or less decide for themselves what qualifies as high risk, high reward, and the article itself also very vague. It's already 4 years old and you can go read it yourself on FTMO's website. There are no clearly defined rules, no exact limits, and no transparent guidelines. FTMO essentially reserves the right to interpret everything on a case-by-case basis and apply these rules however they choose. So that's definitely somewhat to think about, to keep in mind. Some of these firms may not exist forever, and even if they do, it's possible you won't keep receiving payouts forever. So if you remain consistently profitable, at the same time, prop firms can still be a useful opportunity, a potential way to build up your personal trading account. Of course, I also want to point out the risk involved, especially with those firms. Factors like slippage and execution conditions make it statistically more and more likely that traders without a solid strategy will fail these challenges. And that's ultimately the reason why these companies exist in the first place. But if you want to learn more about the strategy I used here, not just for these 2 trades, but for all the trades I personally take, including the trades that led to these payouts, then click the link below the video. It will take you to a free video series where I explain the setup and the strategy in much more detail, including how you can use these fundamental data tools yourself, since they are always the first step in our analysis process. And if you still have any questions, or if there are specific topics you'd like me to cover in more detail, feel free to leave a comment below this video. Make sure to hit the like and subscribe button so you don't miss a video in the future. I wish you all the best with your trading, good luck, and I'll see you in the next video.